that, there have been various issues that this industry has been facing. So, before going into the GST issues, we can have a look at, some real issues that this real estate industry is facing. The real estate industry is one of the second largest employment generating sector. It contributes to around 13% of our GDP. It stimulates demand over 250 ancillary industries. But still, this sector has already always been struggling with various issues. Some of them that I have listed down here: oversupply and drop in demand. Investors have been disappearing. This was the scenario before COVID, that there have been various projects which have been undertaken, and we have seen that there's large number of inventory which is unsold. Long pending infrastructure projects, as Harshbhai said, that the projects are taking too long to complete, say 5 years, 7 years, 10 years. So that has also been one of the concerns of this industry. Multiple legislative issues. In one of the articles that I was reading, it was written that real estate is subject to 100 separate judicial laws. There are various central, state laws. So many issues are being there, leading to complexities and hassles. Some of them I've just listed down: Contract Act, Transfer of Property Act, Registration Act, Land Acquisition, Income Tax, GST. We have got anti-profiteering under GST as well. So those are, various legislative issues in this sector. Quite a few real estate projects have been declared as NPAs, and many of the big players are facing insolvency proceedings. We read this in a newspaper day in, day out, that some of the other developer is facing an insolvency proceedings. Also, there has been sharp rise in prices of raw materials such as cement, steel, and aluminium, diesel. And it is not very easy for the real estate players to pass on this rise in the prices to the customers easily. And also, we have seen that due to COVID-19 pandemic, there has been a slow recovery. Of late, the sector is doing well, that the demand has increased. But still, the 2 years that were there for COVID, it has actually hampered the progress of this industry. Now, after seeing these real issues, some of the GST issues that the industry is facing. First and foremost, taxability of sale of under construction flats itself. In 2010, service tax was levied for the first time on sale of under construction flats. MCH had already filed a writ petition. Bombay High Court had upheld the levy. I have been informed that SLP was filed by MCH in the Supreme Court, and no hearing has been done till date. So whether sale of under construction flat itself is liable to indirect tax, that is a big question mark. Then sale of land and developed plots. We have seen so many advanced rulings coming that, this sale of developed plots is a service liable to GST. So whether GST can be levied or not on this. Valuation of land determined arbitrarily by law at 1/3. This is the Gujarat High Court decision of Munjal Manishbhai Bhatt, which we'll be discussing. Long gestation projects vis-a-vis indirect tax legislations. From 2010 to 2012, we had the positive list taxation. From 2012 till 2017, we had the negative list based taxation in service tax. From July 17 to March 19, we had one set of GST rules and regulations. From April 19 onwards, we had another set of rules and regulations for real estate sector. So if a project commences, say in 2010 and it ends in 2022, which law will you apply? So that is also one of the biggest question marks. Taxability, TDR, FSI, all those are always a hot topic. Taxability of area allotted free of cost to landowners or the society or the tenants. We have the decision of this Vasanta Green project, Hyderabad Tribunal, where they have held that area allotted free of cost to landowner is not liable to service tax. So how far that ruling will go, Supreme Court is yet to decide on the matter. So that is also one of the issues. Taxability of affordable residential apartments in Mumbai. Going that 45 lakhs value, you'll never be able to say that it is an affordable residential apartment. ITC reversal on account of unsold area in the project. If you have unsold area, the department is asking 30% reversal of ITC, 40% reversal of ITC. So that is also being contested at various forums. So these are some of the issues. And believe me, all these issues can be deliberated for 1 hour, 2 hours, 3 hours. You can just go on and on. We have tried to cover some practical as well as some technical issues. We have just taken 6 case studies, and we'll try that, at least we can touch upon the issues in each of the case studies. So coming to the first case study, it is the implication of Gujarat High Court decision in case of Munjal Manish Bhai Bhatt. The facts of the case are, we have a developer, a reputed developer in Mumbai and Navi Mumbai. They have taken two projects. First is the Tower 21 Andheri, where they have acquired development rights from the landowner. And this Tower 65 Belapur, where they have acquired leasehold rights from CIDCO. The consultant is advising them to discharge GST liability on value which is equivalent to sale price less ready reckoner value of land. Company seeks the opinion in the matter. So coming to the relevant provisions under GST, we have got para 5B of schedule 2, which says construction of complex building, civil structure or part thereof intended for a sale, except where consideration is received before completion, after completion, that will be treated as supply of services. Para 5 of schedule 3, which says sale of land and building is neither a supply of goods nor supply of services. 9.1 is a levy section, which says that GST will be levied on value determined under section 15. 15.1 says value of supply shall be transaction value, that is price actually paid or payable. 15.4 says where value cannot be determined, it shall be determined as per rules. And 15.5, it is notwithstanding 15.1 and 15.4, which says that the value of such supply as may be notified by government shall be determined in such manner as may be prescribed. And we have got notification number 11/17, which has been issued under all these sections. We have got 9.1, 15.5, 16.1 and 148. And there is a para 2 in this notification, which says that in case of supply of service, all those 3, 1A, 1B, 1C, all those are under construction sale, where it involves transfer of land or undivided share of land, the value of supply shall be equivalent to total amount charged less the value of transfer of land, and value of such transfer of land shall be 1/3 of the total amount charged. So here is a deeming fiction wherein the value of land is restricted to 1/3 of the total amount charged. So this case study is basically based on the Munjal Manish Bhai decision that we have of Gujarat High Court. Here the petitioner had entered into an agreement for purchase of land and construction of bungalow. The agreement clearly depicted what is the consideration towards sale of land and towards construction services. So there were two considerations in the same agreement itself. The builder was trying to levy GST at 12% on the entire consideration. And the petitioner was stating that you don't charge me GST on the value of land and you charge GST only on the construction consideration for construction services. So they have filed a writ petition stating that the relevant entry of notification number should be struck down and declared ultra vires and held violative of Article 14. So here the High Court, they analyzed the various decisions that we have, starting from the Gannon-Dunkerley's case, constitutional amendment, second Gannon-Dunkerley case, and the L&T case, wherein they concluded that the legislative intent is to impose tax on the construction activity, and there is no intention to levy tax on supply of land in any form. Further, they were saying that section 15, which is the valuation provision, clearly says that the valuation of supply would be the price actually paid or payable. If the price is available, then GST should be levied only on the actual value. Deeming fiction can be applied only where the value is not ascertainable. This mandatory application of deeming fiction of 1/3 is arbitrary, and because it is being applied uniformly. There is no distinction which is being made between sale of flat and sale of bungalow. This was a case for sale of bungalow. Then they referred to the minutes of 14 GST Council meeting. In the 14 GST Council meeting, they were discussing on the rates and this abatement of land. Maharashtra minister in the council had specifically stated that the abatement which should be given for the land should be equal to the ready reckoner value, because he was against this 1/3 deduction, stating that in Mumbai 50% of the cost of the sale price is towards the value of land. However, Gujarat minister was skeptical, stating that this can lead to arbitrariness and inflation in the value of land. So this was also referred in by Gujarat High Court. And arbitrary deeming fiction, only giving deduction of 1/3, it leads to a position where you are taxing the land. Actually, the tax is on construction and not on the land. So by this 1/3 also you are taxing the land, which is excluded under Schedule 3. So it was held that this 1/3 deduction towards the value of land is ultra vires, the GST scheme and violative of Article 14. Such provision should be read down. That is, it should not be mandatory and it shall apply only where the value is not ascertainable. So in case where you are able to ascertain the value of land, you should deduct it from the total sale price and levy GST only on the construction component. So based on this case, whether what should be the position that we should be taking for the case which has been given. So I just invite views from the participants that what should be the views, how should we tax this transaction. The consultant has advised to levy GST on value which is equal to sale price less the ready reckoner value of land. Whether we can adopt this ready reckoner value of land based on the Gujarat High Court decision. Anyone, any views on this?
Why was the rate 12%? Why not 5%?
It was under the SUDD entry. It was for a sale of bungalow. So it was going under 12%. It was not as a residential apartment. Under entry 31F. 31F is a residual entry. It provides a rate for 12%.
So it's the one where if you do not qualify under any of I1, that's when you can go.
I could say you pay the tax on the construction services. So that's why they equated with the work road rate, like 12% or 18%. And here the bidder was demanding 12%. Yeah, bidder was demanding 12%. Maybe he cannot operate for the new scheme. The agreement is 2020. Sorry, the agreement is Gujarat High Court.
It was a new agreement. It was after the new scheme came into picture.
No, that's right. What Naresh Bhai may be saying is possibly the project. Maybe an ongoing project where you would have opted to go for the old scheme. Although this agreement may be 20.
that is why गुजरात में क्या मालूम है the agreement को बहुत लेट बनाते हैं अपने जैसा agreement को sell करके it is under the doesn't work. गुजरात में the agreement can be made at the time of convenience of up to convenience that they delay करते हैं. So that must be the case. I think it was an ongoing project.
So any views from participants? Whether this
you are trying to first make very clear that on the first case you are saying that construction is done for that your very tower.
Yes.
Where you acquired the
Development right.
You have not acquired the land.
Yes.
I think that is the what
yes.
you are discussing for. Then you are discussing
leasehold rights. Any views from the online participants?
Case study has been taken by Jinesh after the Munjal, Manish case. Everything was, the WhatsApp industry was, flourished. Some जगह पे, ये net का निकाल दो, so
So whether we can do this actually,
that, especially in the scenario of the Mumbai, where the development is never done on the virgin land. Here in Ahmedabad case was a case of a pure virgin land, and here, in Bombay we are doing.
It can work for the landowner's share.
Yeah.
For the landowner's share, possibly it can work in Bombay.
How do we?
Even if it is a landowner's share, I think the situation will be quite altogether different. In that case, I may try to argue that for construction services, those contracts are together. There is no possibility of the value of land being ever included in the agreement itself. Over here, the petitioner, Manjuna Commissioner, but was buying a piece of land as well as getting the construction services. In the landowner's portion, I am never buying a piece of land from the developer. It's my own land. I'm just taking construction.
When the landowner sells the land, he is selling the interest in land as well as the construction.
Then for me, selling his own portion. Yes.
About when landowner sells his share, he has the ownership right of the land also. Whether it can work in that situation, right?
Yes.
But still in builder's case also, there is an underlying land which is getting transferred. In the inherent, whatever, there is an agreement where you say 1 crore, 2 crore, whatever. So there is a portion that we are paying for the land.
But how do you determine the value?
That's right. So let me put it differently from a Jinesh perspective. In the given scenario, whether the fact that case A is a development rights case B is a leasehold case, third is the opinion that has been given by the earlier consultant in the facts of this case, is you use the ready reckoner value of the land, claim that deduction, whatever remains is therefore sort of construction service and levy a tax on that. So one possible view that I'm sort of hearing from you is that is not a differentiator to decide,
Yeah,
right? That is what
because
you're trying to say.
underlying land is always there in the transaction, and in absence of any specific valuation by the statute, we can adopt this, and with the support of the Gujarat High Court. See, had they provided specific deductions like it was the case in VAT or service tax, we would have followed that. But in absence of that, we are arriving at a reasonable valuation.
How do you distinguish this with Suresh Kumar Bansal's case? Because Suresh Kumar Bansal's case also, Delhi High Court has said, simply because you are giving the abatement for the land, that is, you are not providing the valuation mechanism. It is only a presumptive taxation. And presumptive taxation cannot be trusted upon the assessment. Here also the situation is same.
I think in service tax there was rule 2A and
That is for the what contract? It was never for the construction.
That was, we had an abatement.
They put it as a retrospective amendment pursuant to the social
Pearl,
case.
if you go through the Munjal Manishwar case also, there is a clear mention about the Suresh Kumar Bansal case to say that was upheld by the Delhi High Court, that there is no mechanism for valuation of the land. Pursuant to that, they made a retrospective amendment in Rule 2A of the valuation rules, wherein then they provided a mechanism for that deduction.
So here basically Schedule 3 speaks of sale of land. Tax should not be levied on sale of land. Here in the first case, we are taking development rights. The builder is taking the development rights. And if we see this entire decision of Gujarat High Court, it goes on to state that in para 3 schedule of in Schedule 3, this sale of land is excluded and price actually paid or payable for the land is available in the contract. That is why that amount should be excluded from this total value, and you should tax only on the construction activity. So in our case, where we have a typical model of development rights, this amount may not be available. And whether, even if builders can bifurcate this under error or MOFA, whether they can charge separately for sale of land or for construction activities, that is also a question mark. There are some restrictions which were there under erstwhile MOFA that you were not allowed to charge separately.
But from the angle of the flat buyer, he is getting that underlying share of land. So obviously there is an element of land, and that tax should not be levied on that land proportion.
Which there is another very strong view that when you are acquiring the development right, your understanding with the landlord is you will convey this in the future to the nominee of the developer. So this land will be ultimately conveyed to the society. Land will never be conveyed to the. It's not that we are conveying the land in the individual member's name. It is basically conveyed to the society. And you are as a member of a society, is getting only right to enjoy. You are not the owner of the property as such. You are neither the owner of the superstructure, you are not this thing. As a member, you are admitted as a member of the society, and as a member, in case society gets dissolved in the future, then you get indirectly the whatever the appreciation is there. Simply because you are a member, you are not becoming the you don't have the undivided share in the land. That is what the whole issue is. And again, at the time when you are entering into the agreement, when you are buying, all these conveyancing will happen post OC, and thereafter some time will be taken. But when you have bought the flat, when you are taking the possession, at that point of time, there is no land is transferred to you as such. I think that is also one of the points that we need to keep in mind.
That is the case only case of Bombay or some other place.
Yeah.
Example in Bangalore,
In-
we had proportionate
Yeah.
portion of the land.
Then it's okay. Then,
Cases may be different
Yeah.
based on the area.
so we are talking specifically today this case study.
Rights or the leasehold right.
That particular thing. Otherwise, we will not be able to.
In fact, sir, just to add 30 seconds on this, we had filed an advance ruling under GST in Chennai, where there are separate agreements made also. There is sort of a binding document also, but there are separate documents for land and separate for the construction service as a practice. Real estate typically in Gujarat tends to follow subword, wherever there is convenience. So in Chennai, in the facts of our case, the value of land apparently was even lower than 1/3. So the desire was if we get the AR which says yes, 1/3 deduction should be allowed, that will be ideal. Even when there were two separate agreements, that particular AR held that no, this is a prescribed deduction and the deduction will therefore be 1/3 and that is what will be allowed. Now this goes exactly opposite when we look at a situation like Mumbai. So like you rightly said, just to complement what you said, that the practice is very in this case, one point that we hear Naresh Bhai saying is whether there is a sale of land per se, which is out of the purview of tax, is one angle that we may have to apply to decide on the possible position. But Jinesh, in terms of time, maybe you decide on what your thoughts are on this.
And we
what is the
just we have one online participant, Mr. Subramaniam. So, sir, can you just unmute yourself and speak?
Hello.
He's already unmute.
He is unmute. Yes.
Hello.
But we are not able to.
Hello.
Yeah. Hello.
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 Yes, sir. Hello, sir. Hello.
Yeah, so we can hear you.
Hello.
Yeah.
Yes, sir, we can hear you.
Yes, sir. Sir, the same principle, and as you rightly said, in Chennai or in Tamil Nadu, the UDS is separate, the land, the portion is separate, and the construction portion. Hello? 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 Sir, hello, am I audible? Hello?
Yes, you are audible.
Yes, sir. Sir, in Tamil Nadu, the land is being separately registered. UDS portion is separately registered and the construction agreement is entered separately. So the land portion it is very difficult, it is very easy to find out the land value. But the department is taking a totally different value. It says, the department says that you have to pay the stamp duty on the entire, both land and as well as a construction. Then only you are eligible for this, otherwise you are not eligible. So therefore I need your inputs around this. Even though the land value is separately shown and the construction is separately entered, and we took as per the sale deed UDS portion, we deducted the land value, but the department says no, you paid stamp duty only on the land value. You are not paid on the entire, therefore you are liable to pay the service tax on the entire value. This is a stand of the department in some cases. I need your inputs around this.
Noted your point, sir. So just my views on this, whether we can apply this decision straightforward in all our cases in Mumbai where we have development rights which are being taken. It seems a bit difficult. There is no as such sale of land per se to a member, though he may be having some rights or he may be enjoying the benefits of the land. It may seem very difficult to apply this this decision blanketly to projects in Mumbai. Even in the case of leasehold rights, we see that there is no transfer of land. There is no sale of land, not transfer, I would say sale of land, which is excluded under Schedule 3. So applying that also in Navi Mumbai case, that would become difficult. Though we have 1/3 decision, which says there is some transfer of land, but in absence of any specific value which is available to us, we'll have to go by the deeming fiction. And we'll have to wait, whether some suitable modifications or amendments are made in the rules or by way of some notification.
So, Jinesh, what I'm summarizing from your talk, as far as leasehold right is concerned, it is basically out, correct?
Yes.
So, leasehold right, only the owner can sell the property. So, whether it's owner, correct? So, leasehold right, so Navi Mumbai, Panvel, Raigad, and all the things.
Very difficult. Yes.
As far as development right is concerned, you are saying still the argument can be taken, the development right or say it's a land. If the court decides that it's a day, but as on today, the trade is or whatever the views are being taken by the most of the professors. We say the development right is a service, right?
Yes.
And it is how then in that case, how would be different from any other service? If I take architect services for construction, like this, I am taking the service only for construction.
Jinesh, see, if you are saying there is no transfer of land, then you will not even get the 1/3 land.
There is transfer of land, but how do you ascertain? I told that we have got, there is some transfer of land for which we have 1/3 deduction. But how do you ascertain the value of land? The ready reckoner value might be a minimum benchmark, but that is not the actual value. So if you don't have the actual value, which section 15(1) also says, the price which is actually paid or payable, we don't know what is the actual price payable for that. So how do you determine the value for land?
The government is at a failure to prescribe, to prescribe the mechanism. So in absence of mechanism, I am arriving at a value and that should be accepted.
That can be one of
Or
the
else I
arguments
can
that
go
at
one
least a
step
minimum
further.
benchmark of ready written value should be allowed as it
Or
is.
else I will go even one step further, that since the mechanism is not there, then the levy will fail.
So Harshbhai, will you take
So
this
there-
argument to the court that we deduct the ready written value?
Yeah,
Saying
at the court, at a rate 100%, we will take this argument, and this tends to sell only at that level, it will not typically sell at a lower level.
Saying that there is no transfer of land will go against us while claiming the 1/3 reduction.
Yes.
So case of society self-development, and the society itself is a landowner. In that situation,
Yeah.
can we claim this?
Society itself being a landowner.
The free sale area, not able to sell to
But-
outsiders.
Again, how do you determine the value of land? Society will not, when society is selling to outsiders, how do you determine?
Society to outsider. Society to
They-
self-development, the additional premise that it is selling to outsiders.
So how there also you determine what is the amount charged towards value of land and amount charged
Proportionate basis.
Jinesh,
what proportion?
if I'm not mistaken, this judgment act maybe fag end, if I'm not correctly, they are trying, sorry, this is high court judgment. At some point of time, they're trying to put for that reasonable means, as referred in that rules, can be taken into play. So your ready reckoner value of the land, maybe a minimum benchmark may not be the actual value prevailing, it may be higher or lower. But is it
So
reasonable?
if you have taken that one, I'll just throw a light that, this was the point of the respondent stating that if you're allowing deduction towards value of land, there can be an inflation in the price of land, and hence, the construction services that will be deflated. And the tax, coming to the revenue would be a lesser amount. And for that, they've stated to arrive at the value of construction services, you can go to the rules, not for the value of land. If we read that judgment,
What Jinesh is saying effectively, if the valuation rules are the rules which will allow you to derive at the value of
Supply.
goods or service.
supply of goods or services.
We are trying to read this to say this is a means which will allow me to find the value of land which is to be deducted. The rules are actually rules only to derive at the value of goods or services and not land. Just to add to the conclusion that Jinesh has reached, that it may be difficult in the current both the facts to adopt this. One is there is no actual value of the land in either of the cases. Right? For a moment, we presume that the consideration includes the value of land. Whether land is being transferred or not, we are parking that aside for the moment, but there is no actual amount available. One. Second, for all to note, in this judgment, when the ruling has been given, they have gone back to the legislation which were under VAT, which were under service tax, and all to say that in the past also a deemed deduction has been provided. But there has always been an option which has been made available to an assessee. Under the provisions that are currently there is no option but to just reduce 1/3. Second, they have said wherever such actual value is not available, one option is given, or else they have deemed deduction. So for VAT in Rule 58, at one point in time, depending on the level of construction that was done, different deductions were permitted. So these are all the situations where actual is not available. One more technical argument in terms of 15(5) that was provided, because the respondents took that argument, that it is said that the rules in the mechanism as may be prescribed. But the definition of prescribed also under section 287 is what is prescribed by the rules. And the 1/3 deduction in the present case is by way of a notification. It is not even come by way of a rule. This is again going akin to what was there in the Suresh Kumar Bansal case. So fair possibility for us to expect a sort of a retrospective amendment, not that this judgment per se will not be challenged at the Supreme Court as well. That's our anticipation, and that's some informal information that we've been able to gather. They will challenge this, but we should expect, because there is a lacuna that this has been prescribed by way of a notification and not by the rules. Even within the four corners of the law, there are some loopholes here that they ought to make it correct. But a conclusion, at least from my side also, would be that in the given scenario for the two situations, we may not be able to take a reckoner value, because that is neither a deemed mechanism by the notification, apart from the fact that the actual value is not available at all. So basis that we may not. Yes, sir.
In case of self-redevelopment, the land, the property is with the society itself. It's not going to pass on to the new purchaser of the flat. In case of redevelopment also, it's the same scenario. See, in the redevelopment, developer has a development right. Land belongs to the owner, and ultimately it will be transferred to the society, not to the flat owner. So there is a clear bifurcation of ownership of
Land.
and rights to use the land and the ownership of the property.
Point taken.
So here, just a small point to add.
Sure.
If we look at the regulator from Maharashtra, for example, there is a table that defines the values like land value, then Sadmika, the flat value. So can we go into the act that governs the regulator to find whether that Sadmika has been defined, which includes the land as well or not? So if there is some definition found in the revenue codes or anywhere, and if there is definition stating that now the Sadmika value has been defined including the land, then we might get some hint that this value now includes this land regulator rate that has been defined in the revenue.
That can still even be a minimum benchmark value, but that cannot be an actual
We will
value.
not be able to substitute the actual value, which is what is the legacy of legislations and rulings around this. In fact, just to add, in RERA, while we aren't experts on that, I think there's a need to submit some form 3 whenever the money is to be withdrawn, and that has to be certified by a CA or something. In that, you give the bifurcation of your land cost and your construction cost. So this is actually very close because it's being certified by a professional as what is my cost. But the important point of distinction is that cost, and what you are recovering from the customer is not going to be
Not
cost.
the value.
It's going to be your sale value. And therefore, again, this also can be used as a benchmark. Just as we are saying reckoner value is one benchmark, here's another example of a benchmark by the authority which is regulating this law to the core. But all of this will not take us close to saying that this is my actual value of land, and till the time you don't have that, it will be difficult to adopt this particular decision. Last is I was just checking with a colleague in my office. He said per se in RERA there does not seem to be any restriction on a developer. He said we need to explore this because it's going to be a big change in all our agreements if this is what's to be implemented going forward. But there does not seem to be any restriction on the developer to show the bifurcation. If this sails through, then we are saying that there is a possibility of this decision to be followed here. If at all that is done, then we will soon see 1/3 के बदले most cases में 2/3 का deduction चला जाएगा, 1/3 पे we may ultimately have the tax. But this is to be tested clearly.
We can try then, drafting agreements as it is done in South. Where South you are permitted to charge separately for land and building.
And just add another point. Even if we try to determine the actual value of land that is in the agreement, would it make a difference? If I'm not mistaken, the facts of the case as in the upon that the piece and parcel of land was clearly demarcated and the ownership will be clearly shown in the land extracts in the name of the petition. That's part 1. So undivided share and clear demarcation in your name. That is one.
There was an
second
undivided
factor in my view. Second thing that I somehow felt where this judgment was logical, even if it is being challenged, is that the land that was being bought was around 10,000 square meters and the construction was being done on 1,000 square meters. So that is where the arbitrariness of the taxation then came into play. That I'm buying a big plot of land, I'm constructing on just 10% portion of that, and you're trying to levy the entire tax on the entire 90 balance portion on which there is no construction at all. So that is where the arbitrariness came into play. So would that make a case for the revenue to distinguish, even if we determine the actual value of land, even if it surpasses the RERA, MOPA, all those things, still can this point of contention come into play that in Mumbai or in around Mumbai there is no clear demarcation and
there is no undivided share.
there is only undivided share, there is no demarcation, there is no divided share of land. And the second point being that the concept fundamental, the fact on which this case was being judged was that there was a big piece of land and the construction was only on small parcel. So could that be?
So the second point may or may not really matter. for the simple reason that the fundamental here is that there should be no tax on land.
Land.
Now, whether it is only 10% out of 100 that I bought, or whether it is on the entire 100%, the underlying law continues to remain that there cannot be a tax on land per se. First point, yes, it will be difficult to have that undivided share and the demarcation, so this could also, add.
So, just one if we define the value goods or services, not the land, then not the good services. But to arrive at the value of this service of this construction services, if we are taking a reasonable value to Ascertain, and we say that we are not trying to value the land, to value the services, I am putting a number at the land.
So that is what you'll have to explore in courts as well. When you're saying minimum benchmark, that to ascertain the value of construction services, I am removing the minimum benchmark, which is the reckoner value. Balance portion is towards construction. So that needs to be tested, because reckoner value is still not an actual value. That is only how we are trying by using, say, by 30, 31. But still, if we go by this decision, they said that the rule 30 and 31 should be applied for construction service. How you want to determine that, the value of construction service? And go to the next. So this was case 1. We'll go to the next case study. This is a practical one, which we are facing day in, day out. Procurement from registered person vis-a-vis procurement from unregistered person. So under the new scheme of charging 1% and 5%, a builder is required that 80% of the procurement should be from registered person. Only 20% of the procurements can be done from unregistered person. So the case study revolves around that. There's a company called Bindas Builders. They have commenced construction of residential project in May 21. That is under the new scheme. They have incurred the following expenses during the financial year 21-22. They have taken development rights. They have paid rent allowance, shifting allowances. They have taken the premium or the incentive FSI from the MCGM. They have electricity charges are there, water charges. They have paid salary and wages. Some other statutory payment to MCGM have been made. There is interest on loan which has been taken by them. They have paid some legal fees, and they have procured some cement from unregistered person. So notification 3/19 provides that 80% procurement should be from registered suppliers. So company seeks our opinion whether all these expenses which they have procured, up to what extent and on what reverse charge would be payable. So we have got section 9.3 and 9.4 for the reverse charge provisions. And then we have notification number 11, where these conditions have been laid down, that 80% of input services. There are some exclusions, which is other than services by way of development right, FSI, electricity, high-speed diesel, natural gas, etc. It shall be received from registered suppliers. Also, input and input service on which we have paid tax under reverse charge, it shall be deemed to have been purchased from registered person. So those are to be treated as registered purchase. Also, when this entire exercise is to be done at the end of financial year, and if our procurement from unregistered person or from the registered person falls below 80%, then the tax needs to be paid by promoter under reverse charge at the rate of 18%. And where you are receiving cement from an unregistered person, you have to pay tax which is applicable on cement under reverse charge. And this is to be done on month-on-month basis. And that 80-20 exercise is to be done on an annual basis. Project-wise. So project-wise accounts have to be maintained. Tax payments have to be calculated at the end of financial year and needs to be disclosed in your 3B by not later than the end of financial year. And all these conditions are mandatory. We have got an FAQ on that. There's a question 10 of CBIC FAQs dated 7th May 19. This is only a reverse charge entry for reference. So I'll invite your views on this, whether all these payments which have been made, whether they are liable to reverse charge or not. I'll just open the case study for your reference. First being the development rights. Development rights would be procured from a landowner society who is probably unregistered under reverse charge. So on that, whether
Specifically excluded.
So that is specifically excluded.
The notification is there.
Yes. So not to be included in the total procurement itself. Then we have got renting allowance, shifting allowance, which is being paid to the society members. So do we need to?
I will request you to do because what is excluded from the thing,
So development rights excluded. Then we have got electricity charges. That is also being excluded directly from the notifications.
Yeah.
Other than this, there is no as such specific exclusion, even in the notification. What about rent allowances?
There is a notification, it is not being case study.
What?
Even in this cover.
That is to be treated as registered purchase only. What about the rent allowance, shifting allowances paid to the society members? Whether these all society members would be unregistered under GST. So whether we need to pay reverse charge on this, whether these two are to be included in the calculation of 80-20 in the total procurements.
This would be a part. This is rather a consideration for the development. So you can say this is as good as payment for a.
But can we say that the society members are supplying some services, hardship services, for which you are paying them this allowances?
There is an advance we have level with to the district.
We will not go into that, but
This is a payment towards the development. Because there is nothing else which comes from this cycle. It's the rights which come.
Even for applying the RCS, first we need to find out whether it is a supplier.
that is what the exact point is.
So how, I mean, all the rent allowance and all these are from the personal individual. Whether they are whether it is a supply. If it is not a supply, then RCS also is not, there's no question of RCS.
So your view is it is not a supply, so no reverse charge. Anyone, any view?
But the point is, how will we analyze each and every payment made to the member, whether it is a supply or not? See, many times there would be a case that there are commercial shops.
You are having, when you are entering into permanent accommodation,
Yeah.
you are having like these are commercial.
Commercial.
Non-commercial, residential.
And here
we don't bring into account.
and we restrict to it is a residential project. We assume all these are residential members. So any contrary view that we have got a view that it is not a supply. So if the group agrees, I'll go to next. Incentive or premium FSI.
Jinesh, I'd like to agree with what was spoken by Keval also.
Yes.
This can also be looked as nothing but
Development
rights only. So not a supply is one.
And second-
Alternatively, the supply is development rights only.
Good.
In either of the cases, there will be no this thing. The answer won't change.
Incentive premium FSI. I think this is also covered by notification.
Notification.
That FSI or any other additional FSI that is excluded. Electricity charges, water charges.
The position here should, I mean, for the rent around 16 allowance, the position should not be inconsistent with the position taken in income tax. So there people, because you do not pay income tax, take the plea, it is hardship allowance.
Hardship allowance.
And this is for tolerating the
Tolerate, yes.
or intermediate. So if you
So-
take a position there, then
So that is why the first position it is not a supply. It is not in course or furtherance of business. There is no business here.
And again, another view is the development rights are transferred by the society. And these particular things, are being paid to the members. I mean, all the preambles of the agreement says to tolerate the hardship or do this thing and that thing. So that is one of the, the basic, the practical ground level problem is that. So
Whether they are providing any service or
it is a consideration for the development right, that is for the,
Even if there are multiple elements, somebody can look at it as a composite supply. The primary supply would still continue to be developed.
the development rights are transferred by the society. That is the,
the point is the suppliers could be different. One is
Yes,
the rights you are getting from the society. This you are paying to the members. For instance, hardship, shifting allowance, for example. It will not be via society, you and the members.
Okay, what I'm trying to say is the consideration is for the transaction. The payment may happen to third party. The beneficiary may be somebody else. The ultimate flat also goes to a member.
like that way, I mean, under contract act, consideration can always be paid to a
Third party.
yeah, again, see, generally what happens, you are making a development agreement with the society, and that agreement is made after the, resolution is being passed by the
Members.
Basic consent is
Yes.
always there. in that sense.
So either or argument we'll exclude it from this reverse charge.
Let us cut short that he said, either development right
or
the
this.
conclusion
Both.
still we just
To the limit change.
What?
Let's go.
Next we go to water charges. What about water charges? Do we pay, and if there's a shortfall, do we pay tax on this water charges which are being procured?
electricity charges is mentioned in the notification, water charges is not mentioned.
And we presume that it is from an unregistered person. We will not go into that debate also. We will not go that,
Unregistered person.
it is from an unregistered person. We are presuming that.
Water take a water.
So whether do we pay tax on this?
I think water is a exempted goods.
Maybe Bella says, I think we should divide the question into two parts. First, for calculating 80-20 ratio.
So calculating the total procurement.
Yes, 80-20 means, will you include in the denominator as well as the numerator of the? That is the first thing.
Or
Having done that, then you apply, whether you are paying the tax on that or not, that's a different aspect. We don't straight jump to the,
Yes, yes.
second aspect.
no, I was coming to that point only. It is exempted goods, so it is a valid good. So you have to consider in the calculation.
Yeah, you are saying it is a, see, the word used is, I think, all input supplies.
Yes.
All input supplies.
Value of input and input
Input
services.
and input
Input
service.
supplies. Correct.
Yeah.
So
It will
definitely
be
it's
the
the input.
Input.
Definitely it is an input.
Input.
So it has to be for calculating. we
Total
have to-
procurements, you will have to add it.
Total procurement, we have to add it.
And then you apply 80-20 on that. And then you see what is the shortfall. And if there is a,
You wait from table.
yes. So in principle, sir, first we'll discuss whether, if something is exempt or taxable, whether we need to pay reverse. And then I'll go to that table, which will give the summary. So water charges, one views that it is exempt. So something,
Included.
it will be included in the total procurement, but while calculating RC, we will not pay on that.
You
It
will
is,
never get the breakup, no? Shortfall is on account of water charges or any.
Once
other
it is
thing.
included in 100,
Hmm.
then if total registered supply is 75, then I have to pay on 5.
On
na?
5%.
Then
so
there
can
is-
I then say that, that 5%, 5 shortfall is there? I'll exclude water charges from that, stating that, this is something which is exempt.
In the total procurement.
So in the total procurement will be included, yes. So then if we take this view, something which is not being taxed directly, which is exempted, can you say it will be taxed indirectly for a builders?
Yes.
But then it will
Then
get
we have
mixed.
the different views. I think Jinesh will
Ah,
come to
we-
that.
I'll come to,
Yeah.
You are saying that once it is exempt or non-exempt, or it is exempt or taxable, what it falls under the shortfall, you have to pay tax on entire thing, correct?
Blanket, jitlo bhi shortfall hai,
That will be different views to that, correct? But one thing we have come to the conclusion, it has to be included for calculating the
Yeah.
shortfall. correct?
Yes,
Total
it
value.
will form part of 100. Let's
Yes.
put it that.
Yes, yes.
next is the statutory payments made to MCGM.
So you are premium, right? It's not
No, it is other mandatory payment,
Fire chief officer, fire.
CFO fees or like that.
Yes.
I think there is one notification that services by government is not a goods nor a service.
So that is 14/17.
He's talking about the statutory function of the government, being excluded out of the ambit of supply.
240 W पड़ता है, that is excluded. Let us assume that this not doesn't fall under 240 W. The statutory payments, for example, आप जब वो करते हो, तो जो मिट्टी वगैरह निकलता है माइनिंग के लिए, उसके ऊपर भी टैक्स to be paid.
So it can be either or. There are some payments which are made pursuant to 243W as well, which can be covered there, and some which are excluded. For the time being, we'll presume under 243W that these are 243W payments. So whether on this we need to pay under reverse charge.
To be counted is
To be counted.
100
To be
You don't
counted.
need to count on it because it is neither goods nor service.
So it is neither a supply. So just like we had a view for rental on same, being.
There are applications which are now started being issued on applicability of RC.
Yeah, that is the started.
They are saying it is not covered under 243W.
Or is that started?
Yeah, started.
On what, on this?
Government service.
All any government जितनी वाली जो भी पेमेंट किया ना, सबके ऊपर टैक्स करो. If it doesn't, they say it's not 240 W services.
So town planning, you have to clear this. Urban town planning, and everything is.
Point
clear.
is, it is reached to a litigation.
Yes.
क्या लेंगे?
They are saying that
TMC
you have-
TMC more than 2 years back and issued notices on development rights. They took the data saying आपने किसको किसको development rights दिया है, and all those developers have got notices that why you have not paid tax on this under reverse tax. And municipal corporation.
So we stick to our case study.
Being so it is everyone is of view that is 243W, neither supplier of goods nor supplier of services. So to be excluded at the first stage itself. Salary and wages, not a supply. Interest on loans.
Supply
Interest on loans is a supply or neither a supply. What is the view?
So there is first of all exemption for interest.
Interest.
Right? So you need an exemption when something is taxed. And 43 is essentially for calculating how much you have to reverse. In that, there is an explanation to say that interest on loan shall be excluded from that calculation. So that exclusion is specifically for that rule 42-43. Otherwise, there is an exemption. That's why there is no tax.
It is exempted services.
It's an exempted service.
Exempt.
I will put a question. Any entry in the exemption notification does itself mean that it is a taxable supply?
No, that is what it is. But lending.
Lending
itself is a
service.
Services is the
Service is the lending service,
Service tax.
and consideration is the interest.
And your service, if they are taking the processing charges, something other charges for that service, whether interest represents a consideration towards the service.
Interest is always for the use of money.
Absolutely.
Correct. Use of money. When I am giving my money to be used by somebody else, I am providing the service. The transaction money per se is not taxable. But you know, this is the interest, the lending is the service.
Now the interest of loan, this is possible, you know. You might not be procure either from an or from some personal level.
Unsecured.
Now at a personal level, they may not be indulging in business. So for them, we cannot just supply.
Yeah, so here we'll take it as
Your point is right there.
point. Yeah.
But this is like from a bank or
Bank or-
Yeah.
Definitely.
Because then it's same as any other point, rent allowance.
Salary, wages, it will be just like that only. If we say it is not a supply when it is taken from an individual, so then it will be like any other point. So here we'll presume it is taken from a registered person, a bank.
Yes.
Bank is registered.
So this,
So
then
therefore,
it
what do
will,
we do? For 100, whether we include or no?
I don't feel it should be included.
In fact, the larger issue would be for the unsecured loans. If you are giving a loan to a company or anything, how will you say that it is not in the course of business?
Fair point, because possibly right now we may not be able to
discuss.
discuss in that.
My point is, if you are taking secured loans and putting it into 80%, then might as well one person will say you take unsecured and put it in 20%.
If I am giving, or my wife is giving the loan to me,
that will not be in course or furtherance of business.
If she is giving to a company and earning interest for it,
it is a push. The person is invested in
It can be an investment from her savings.
For making the money on interest would be a license. Get the money lending business.
Person giving, you have to see who is in business. Person giving the money is in business or person taking the money in the business. You are
no, individual to individual it is fine, but
individual
individual
company
to
also
company.
fine. I am not in business. I am giving to you. You are in business.
Naraj bhai, coach wants to say that if I am giving money to a company, can it
It's
not
a
be said
business.
that I
It is
am
in
the
business.
of giving money to the, he is looking at it from that individual's perspective only, but he's trying to put on point, that how can we say this is not in the course of business, correct? That's what you are.
So if I was in, as an individual, I was into money lending business, I would need that money lending license. So then in that case, without the license, I'm engaging in illegal activity. Can an illegal activity now be included in the denominator numerator?
So we
For
will
the
restrict
moment, that's
to
not
that.
right.
Yes.
Right now for our discussion.
Basically, it's an exempt item which is there. So this, as we have seen, that exempt item is to be included in the total procurements. Then legal fees and cement, both are under reverse tax, so we consider as procured from registered person. So coming
But
to,
should be included.
yeah, should be included. I think we'll not go into this. We have already seen this. We have already considered all of this. I'll just go to a final summary conclusion table. How we should be looking at this question. First, you take the total procurements in a financial year. It will include everything, whatever is there in your expense side, less whatever are your procurements which are excluded.
Right?
Yeah,
You mean to say you take depreciation also?
you can take that.
Why should?
Then you'll reduce it, sir. See, the procurements not amounting to supply are to be reduced.
It is not an expenditure. It's not a procurement at all. I have procured the capital good 5 years back. I am only, doing the book.
But it does not amount to
Book and receive.
purchases. Then we can go to
Say purchase.
purchases. I correct myself. We take the purchases then.
Yeah.
Then you remove all.
Everything, correct? Purchases and everything. Correct?
Yes.
Including capital goods. Right?
No capital goods.
Because capital goods is,
It is
separated from money.
Yes.
Yes, the working says only input and
Input services. So we restrict to that.
I wanted to make that point. That's what I am saying. No. Goods include capital goods.
input. Capital goods, input service, three separate.
Input can be.
Something which is capitalized book of account is your capital.
Input.
That is for the, what you're talking about is for the purpose of denial of input tax. Input includes capital goods. That your entry in your location is to the extent of input including capital goods for the purpose of denial of input tax credit. When a lower it is prescribed.
I don't have that for the calculation, but even in definition, there is no cap.
There is capital.
There is no capital goods, there is only input, and input service.
Capital goods is specified. What is capitalized in the books of accounts is capital.
Any goods which are capitalized in book of account.
That is capital goods, and this notification speaks only for inputs and input
There is
services.
no capital service.
There may be certain services which may be a part of your fixed asset. That can be
Yeah.
like a software purchase.
Yeah, you are right.
That may be required.
You are right.
Because that is a service.
That will be a service.
It needs.
This will be the biggest headache. I tell you.
Other than capital.
Computing this will be the biggest headache.
So then you deduct the procurements which are specifically excluded by notification. That is the development right, leasehold rights, FSI, electricity, etc.
Okay, fine.
You arrive at the net procurements for the financial year. Then you deduct all those procurements which do not amount to a supply, just like a salary, wages, or the payments made to MCGM pursuant to 243W. All those will be deducted. So then you come to procurements which are to be considered for 80/20 RCM. Out of that, you see what is the 20% limit. That is the column F, the amount F. Then you evaluate what are your actual supplies procured from the URD, less supplies on which you have already paid under reverse charge, because they are to be considered as registered purchase. So the amount G, that will represent your actual purchase from URD. Then you compare G with F, you see what the shortfall is, shortfall of your procurement from registered dealers. And after that, we have taken a position that you need to deduct your exempt supplies procured from URD. This is because something which is not taxed directly, which has been given the benefit of exemption, cannot be taxed indirectly. So you deduct that, then you arrive to a final shortfall of procurement from registered dealers, and then GST would be payable at 18% on that. So this is how I would look at this case study.
Push is not convinced. I will tell you why you are not convinced. I will tell you why we have taken this position. Ask with your permission.
Yeah, please.
Correct? Agree with me? Now what, Jinesh, if you can read 9.4, especially last part. So there's the reasoning that you have taken. If reasoning is wrong, we will correct ourselves. 9.4 માં જે છેલ્લો part છે.
The government may, on recommendations of council by notification,
Last part.
And
End part.
and all the provisions of this act
All the points of this act.
shall apply to such recipient as if he is the person liable for paying tax in relation to such supply of goods or services or both.
See, I am paying under 9.4. 9.4 allows me, if I were myself was a service provider, would have paid the tax on this or not. If I am not liable to pay tax on the water, I put myself as a supplier of the water. If I am not paying the tax, I will exclude from it because I am going on that basis.
No.
And if yourself are,
As if you are the provider.
provider of the service. This is time 4.
Sir, my point is, see, the shortfall is only to the extent of 5%. Say 75% is from registered and on account of this calculation, 25%
So
is
you are
from
saying
URD.
on the support
On that 5%.
You are saying a 25 or 20 je છે.
Uh,
Which comes first in, first out,
First.
the water is
Correct,
there.
correct.
Then that problematic is solved.
Yeah.
If you
So-
take this exclusion, right, at the first step from the total procurements.
So water you deduct from total procurement only.
But that is again a supply.
Yeah.
That is an input service. Input and input service.
Sir, shortfall calculate you say, shortfall is of
Sir,
5%.
once shortfall is calculated 25%,
Yes.
then I have to pay on 5%, then I cannot deduct that water charges and all those things there.
Can I not bring a proportionality in that case 25% je છે, whatever shortfall calculation of.
Proportionate you can do, or if entire 25% is on account of exempted, then it is okay, you don't pay. But if there is a mix, I think proportionate is the best.
So two parts, then we are sort of agreeing, all of us, that ultimately we should not be paying tax
For example.
under RCM on something on which there is no tax
No
for
tax.
us.
As long as you are able to bifurcate that shortfall.
So we said proportionate भी करेंगे,
हाँ,
अगर नहीं है तो proportionate
then why
तो
not
every time
full?
will be able to, bifurcation is not a problem at all. If we are going to agree to do a proportionate.
I agree with you. Bruce, basic exemption of 20. Basic exemption of 20 is there करीने. तो 20 में क्या आता है क्या नहीं आता है, correct?
That will always be a factor.
So in a that would be a proportional.
Agree.
But then again, that as I said, it would lead to taxing something which is not intended to be taxed. So
No, Jinesh, there also we aren't. We are doing a proportionate reduction. So we are saying that, so for example, by doing this, instead of 20, you will end up paying only on 18. Just an example, then what is reduced to is the element of an exemption. So by
but
doing
that
this,
will
we are
not be
paying tax on
100%.
two.
That will not be 100% of the exempt supply, which we are
The
reducing.
conclusion, if we do a proportionate, will be that I am still not paying a single rupee on something which is exempt. What is the quantum I am arriving is on the basis of a proportionate deduction, because I have to apply that 80-20 and pay only on the shortfall.
I'm like the second to what we have specifically excluded from notification, we can have one more like what the guys suggested, which are clearly exempt from as a not a supply. And then what is ultimately totally taxable, and based on that we calculate 80-20.
Sir, ये तो करिए छे, we are debating exempt.
नहीं.
Exempt
This-
we are going down.
This less exempt supplies should be taken up. That is what the question is.
Procurement minus
From
exempt.
total procurement only it should be
At what
reduced.
stage you reduce I push? That is the question that we are discussing.
Yes.
Correct? At what
Yes.
stage you reduce I, whether where it is placed currently in the table, or you take it maybe at B, along with B or
Nowhere.
somewhere.
Nowhere.
D में करेंगे तो फिर वो 80-20 के calculation में ही नहीं आएगा.
नहीं आएगा, but and that is not the intention.
So nowhere I will reduce
There
it.
is a FAQ. There are two sets of FAQ around real estate, 7th May and 14th May, specifically in question 18. The question is whether the inward supplies of exempted goods or services shall be included in the value of supplies from unregistered person while calculating 80% threshold. The answer is yes.
So then going by what Narendra suggested, putting yourself in the shoes of the service provider. So suppose if I got 79% is my all taxable supplies and 21% is my water cost. So am I required to pay on that 1%?
No.
No, if entirely it is
No,
on
exempt.
21 is water, no.
So that is what they are
Because
going
water, then you
proportionate.
will take help of 9-4.
correct, sir.
That's
Even if we propose that you are taking center of 9-4 on the reasonable basis, you are knocking off your tax liability of the exemption.
Exempt.
So reasonable basis, then it is again
ये तो बदलू है, ये तो बदलू है।
it was access act, but you cannot be more fairer than doing a proportionate.
Proportionate. We can explore that proportionate one.
Because
Right.
finally the point of government is to plug the unregistered purchase and loss of revenue due to unregistered purchase.
Also, when I buying exempt supply,
There is no loss of revenue. So again, you are contradicting yourself.
Loss of revenue is only if it's a taxable
Taxable
goods
category.
or services procured from an unregistered person. The government's intention is not have interest on don't pay 18% tax, right? That's not the intention.
So we'll move to the next case study. Yes.
you would tend to at least park this money from your books of accounts also in your project account.
cost.
And project-wise accounts are to be maintained, and this exercise is annual. So you may still have to do this. The point is this: if you don't, then for that particular year, you are escaping this condition, which is required to be fulfilled for you to get into that
1% or 5%.
If you try to save there, they may deny you the 1%, 5% itself and say you should have paid 18%. So which is fine, ma'am. Let's take this forward. The intent of this project will be to go under 1 or 5, not under 18. So whenever you go, then you have to look at this holistically, right, for the project as a whole.
So, but when does the project happen? On OKCC or before? Because in first case, you will not be able to sell anything unless the document will never be released.
But expenses, we will bifurcate to project, na? Whatever expenses you are doing today, you will bifurcate that to some of the project. You will.
That particular project only, in a way like your CWIP, right? Although your commencement certificate is not yet there, it will be clubbed as your CWIP for that particular project.
And you'll be opting 1% or 5% for that. So should be seen jointly. We'll go to the third case study. It's a reverse charge on development rights TDR FSI, going with the basic premise that development rights TDR FSI are liable to GST. So here we have a skyscraper private limited who have commenced the construction of multi-story building in March 2019, containing 100 residential flats and 50 commercial units. 75,000 and 25,000 is the carpet area. It contains common plinth, common gymnasium and clubhouse on ground floor, basement for parking, commercial units, and first to third floor for parking of residential flats. The commercial units are constructed from 4th to 10th floor, whereas residential flats are constructed from 11th to 30th floor. Company have procured the following for construction of building: basic development rights from landowner 30 crores, incentive of premium FSI from MCGM 5 crores in April 19. TDR released by SRA in May 2019 for one of its earlier project. They are consuming that in this project, and approximate value is around 5 crores. TDR procured from unregistered vendors in June 2019, and that is amounting to 10 crores. Some of the facts on completion of project: 30 flats are remaining unsold, amounting to 25,000 square feet. 10 commercial units are unsold at measuring 5,000 square feet. The selling price of residential flat on completion is 15,000 per square feet. Selling price of commercial is around 25,000 per square feet. So company now wants to understand, whether any reverse charge liability triggers on completion of project. So here they have procured four rights. First is the basic development right. Second is the incentive or premium FSI. Third is the TDR which was released by SRA for one of its project. And fourth is the TDR which has been procured from its unregistered vendor.
So let's take one at a time.
One at a time.
Are clear. The project has commenced in March 19. These are the various rights on the top of the slide that we see that have been procured. And at the time of completion, the question is there any
RCM liability or not?
On which one, how much, etc.
Basic FSI is taken before 31st March 2019, your case study.
Yes, that is what the hidden question is, because the project has already commenced construction in March 19. So DA must have been entered prior to that.
Yeah, that is
So that's an assumption, not specifically mentioned there, but fair to assume because your project is already commenced, you would have at least some rights with you before commencing.
For that there will be no levy under reverse charge, right? Because it is a point of taxation will be before 2009.
Okay.
For the development rights, since it is before April 19, the law prevailing as on that date will come into effect.
And which is
So
no reverse charge.
Then who would be liable to pay on that?
So is it in service tax era or?
No, we'll presume
19,
GST.
It is
But
GST.
it's
GST.
But
But under
era.
GST.
Yeah.
July 17 પછી March 19 પહેલા.
Or forward charge.
Forward charge.
Landowner will have to charge on that.
Provided you take the view the development right is not a.
No, we started with that premise.
Presumption के development
That
rights
is
are subject to
taxable.
Let us review that. We don't know.
Plus whether
It is a simple calculation. Reverse charge to be paid or not paid.
Yeah, this is he simply restricting to the reverse charge जो है.
So on first we are saying forward charge
Forward
by the
charge.
landowner,
Hmm.
18% at the time of transfer. Any other views or else we quickly move to the
And
next?
even 6/19 also specifies this, agreements entered into after 1/4/19 reverse as usual.
Development rights transferred on or after April 19 for
Our
that.
case is before April 19.
Jinesh, every one of your questions.
Yes, sir.
Forward charge payable.
That if you are outright, if you are bought outright.
Outright, then
If you bought
At that-
outright, so that period point of time when you paid outright.
at that point in time.
Every 19, let's say 2008.
Yes, so when the rights are transferred.
On the date of execution of DA.
If area sharing is there,
Ah.
then perhaps you can go to the.
Area sharing matter
4 by 2018 is
So
there.
ये
So
सारे
here
case में we are making
monetary
monetary
consideration.
consideration only.
So here we are
In the
presuming
matter
with
of this case.
Okay, let's do monetary consideration.
Yes,
Even if it is monetary consideration, this consideration was paid in 2018.
yes.
This situation comes at the end of the project. We have finished the project, we now have this unsold area.
Yes.
We are examining it. So are we saying that the liability will relate back to 2018 with interest?
On the developer.
No.
On
This is for the landowner.
It is already paid when the agreement was executed.
No, it was not paid.
it was paid.
Forward charge.
Being, sir,
At that time
even
also-
if not paid, the point of taxation has already arisen.
When the transfer happened and payable by the person who has transferred the right, from a developer's perspective, he does not have to worry on the liability of the first.
Interest के साथ भरना पड़ेगा.
अगर नहीं बने.
नहीं भरा है तो.
And as Kush pointed out, we have a notification which clearly states that development rights which are transferred on or after, the notification itself clearly states development right transfer on or after 1st April 19 would be subject to reverse charge. Next question. So here we agree that it will be covered under forward charge and landowner is liable to pay. Whether he has paid or not, that is a separate question. But he's the person who is liable to pay. Developer is not liable to pay at the time of OC. Second question: incentive FSI from MCGM in April 19. Whether you are required to pay under reverse charge. So there is an exemption, but not under 12/17. It is only for governmental authority. MCGM being a local authority, there is another notification, 14/17, read with 16/18 central tax rate. In that it says that services provided by local authority in relation to function interested under Article 240W is not a supply of goods and not a supply of services.
It is not exempt also. They say it is not.
It is
like you have Schedule 3.
Schedule 3.
They have not put it in the Schedule 3. They have given by way of the notification.
So if something,
Do you have that list 243W?
I have it.
Oh, in the urban town planning.
Urban town planning and I have.
Regulation of land use also comes into this.
Yeah.
Regulation of land
Here.
use and construction.
some of the relevant
Very
entries,
important. Regulation of land use are
There are.
construction of building.
And town planning.
I just.
Construction doesn't feature, it's regulation of land use and town planning.
And no, it is construction of building.
construction of building. Yes, it is there.
Three entries are relevant for construction: urban planning, including town planning, regulation of land use and construction of building, planning for economic and social development. And if there is an SRA, we have got a slum related also entry, slum improvement.
Improvement and operation.
Just for the benefit of the audience, what department is taking the position? The department proposed notice comes telling that the urban planning, including town planning, is not a job of municipality. It's a basically, there are some other planning authorities are seeking, because it is generally done by the development control rules and regulations that are not framed by the municipal corporation. So they say like MMRDA and all these authorities are the town planning authorities. So it doesn't fall under the urban town planning. They stop there and they say that's why you are liable to pay the tax. But they are not going into the second entry. Once it is the development control rules are made, but who is regulating it? EMC is regulating it. municipal corporation is regulating. So, it comes under the
Regulation of land use and
regulation
construction.
of, huh?
There is some doubt whether
Yeah.
regulation of land use is wide enough to cover the payment of premium.
And construction of building. See, basically, आपको exercise दे रहा है वो लोग कि भाई इससे तक आप जा सकते हो. It's a construction of, you are giving, you are regulating your construction of a building. इतने माल से ऊपर नहीं जा सकते हो.
Regulation has to be of land use.
Regulation of land use and construction of buildings. I read, that is why I read. Regulation of land use and regulation of construction of building.
But Naresh,
Sir,
in absence of the second clause, is the argument correct?
Very.
About what you said.
Sir, MMRD.
this is what the notices have started coming.
Yeah.
And even if we read the end, it says in relation to function. And in relation to words are always defined to have a larger meaning. Like, you need to give a wide expression to it. So even activities which are incidental to regulation of land use and construction of building can be covered. We can even try that argument that, it is in relation to a function. So even this granting of premiums and everything, that is in relation to a function.
See, just the thought is coming as you said, we haven't explored, but if you read 14/2017, it says notifies the following activities or transaction, but undertaken by whom? Undertaken by central government, state government, union territory, or any local authority in which they are engaged as a public authority. So should we read this, Naresh, by what you were saying that only municipality is entrusted with 243W?
No.
And it's not BMC who's doing, somebody else is doing. Whichever is that authority, as long as it is falling in the above portion that we just read, central government, state government, local authority, in which they are engaged as a public authority. So what is given below is the type of activities, who has to undertake. There the restriction is not only to a municipality or a panchayat. That is only enlisting the examples or maybe exact the activities undertaken by any of the above. So that also can be a very good argument in that show cause. Then say, okay, BMC doesn't do, the requirement is not that only BMC does, then only there will be an exemption.
Sir, in fact, MMRDA is, I think it is part of state government.
It's a governmental authority.
Government.
Oh, state government, right?
Hey, here issue is not that. Here you have paid the premium to the BMC corporation. There's a service provider is the BMC corporation. You have taken the services, whether that service itself fall under 240W or not. See.
They are denying, stating that they are not falling under 240W.
BMC.
This is that Thane
Yes.
Municipal Corporation, for example, I said, the notices sab aaya hai. And people have not paid on this basis only.
No one has paid. Everyone has taken majority of the players have taken a position.
The industry is paid it.
No, that's
Nobody has ever paid.
अभी तो 5% आने के बाद में पहले तो समझो
Credit मिलता
कर दो भर दो ले दो करके लेकिन अभी
तभी भी कौन भरता था? Cost of capital.
नहीं वो बराबर है
So what do we conclude on this? Whether it is in relation to 240W?
सॉरी
किसी का application हुआ है?
अभी आने का चालू हुआ है
Sir, it is at a pre-show cause stage. DRC 01 में आता है या तो scrutiny में आते हैं वो लोग, assessment में आते हैं, ASMT 10, and all these they are taking out the points.
Frankly speaking, even the adjudication, it's just like next to AAR. You're bound to get the order that you already expect, no matter the representation.
नहीं,
Once you get that order, there will be something further.
नहीं.
That stage hasn't yet reached.
So this, whether reverse charge required or not, covered under 240W?
Just take one thought, I think we have lot of discussion and debate. There's always a difference between the statutory functions and sovereign functions and a constitutional duties. This is ultimately a constitutional duty. So can we say it is the sovereign function
Should not
has
be
been
done.
passed on or dedicated to the BMC corporation, and it is not a service at all to say that.
In fact, sir, 12/2017 implies that itself. Because something which was entrusted through constitution to a municipality, and anybody who does that function will be exempt.
Exempt.
So
We can explore.
We can-
one of that, one of the argument, basic argument, it is not a it is either goods or services, it is something else. It is not a, it's a basically a constitutional function, some constitutional authorities are performing.
In service tax, in positive list, if I remember, we had some judgments where, statutory functions entrusted, it should not be taxed. So that can also be one of the arguments. But here,
one of the things that we need to explore in our scope of reply.
first line of argument would be Article 243W, neither supplier
First line of argument should be
statutory functions.
Then second line of argument should be this.
So either it is neither supplier goods nor supplier services. So no reverse charge required on that. TDR released by SRA. It is for one of the earlier projects, but now it is being consumed in this project. So whether on that are we required to pay under reverse charge?
Reverse charge is required when you are making the payment to the government, state government, central government, or
Local authority.
SRA is not a local authority.
So that is no reverse.
It should be paid by the
But
SRA.
sir, reverse charge notification says development right, FSI, anything transferred by any person
So
to a
that
promoter.
In that case, that falls under two reverse charge entries, right? One is a development reverse charge.
Yes.
Another is a normal reverse charge payment.
Government.
Government payment. Yeah. So governmental authority they own that. Now you are on this particular development right.
Yes.
Promoter only liable effectively under RCM is the entry that is referring.
So
Again, in that 243 number, you will not correct. Slum.
Yes, so there is one exemption entry 4 of notification number 12/17, which is services provided by governmental authority in relation to function interested under 240W is exempt. So if whether SRA is a governmental authority or not,
Yes, sir, AMR there is no doubt about it.
that is also the view that we have. SRA is a governmental authority. It is being set up by an act of parliament and being controlled by the government. And it has been entrusted function of Article 243W, which is slum improvement and upgradation. So it is a governmental authority and there is an exemption available to that aspect as well.
Yeah.
And last is the TDR procured on or after April 19. It has been procured from an unregistered vendor. So whether it is to be covered under reverse charge, then we have an exemption that TDR which goes into under construction sale of residential flat, that is exempt. And TDR, which is specifically used for construction of commercial apartment, that is taxable. Even if it is sold under construction or after OC, it is taxable. So how do we calculate GST payable on this? The facts, if I just recollect the facts.
Yes, I agree. You are unregistered vendor, you also buy from anybody. Eh? You are starting.
Anyone. So it is just put the
flavor.
Element, flavor to it. URD or RD wouldn't change.
So only facts to put up that the commercial units are constructed from 4th to 10th floor. Residential flats are constructed from 11th to 30th floor. TDR has been loaded on that. And on completion, 30 residential flats are unsold and 10 commercial units are unsold. So how do we bifurcate the value of this TDR? It is 10 crore rupees. So how do we say how much amount pertains to the commercial apartments, how much amount pertains to the residential apartment? Or can we take a position that TDR is loaded for construction of upper floors, which is the residential apartment? So, you don't pay any tax pertaining to commercial apartments. Can we say, or, TDR becomes part of a common hodgepodge and you have to allocate on an area basis?
When we look at this notification 3 onwards, the entire way it has been drafted, the entire focus has been on warehouse application. And for the project, everything has been linked to that. So the ideal scenario would be you look at for the project and basis that you distribute and don't just try to identify whether PDF is being loaded here.
So no one-to-one identification. It forms part of a common hodgepodge.
I think it should go on one point. Part of the project also, that is also going to be a separate project. In that situation, like what I was trying to draw,
If it's a separate RERA project, yes, then I would agree. If it's a part of the same RERA
It's a one project. It's a one RERA project.
so just what all is not from that.
Even if we are able to establish that it is on the top floors, then it would be entitled to the exemption. For commercial, there is no exemption.
There is a credit.
So that is what, we can take this out of the GST net. Like, at least for the commercial apartments, stating that commercial apartments are constructed only from the basic FSI or the FSI which has been, released by SRA earlier.
And in fact, every time we purchase FSI or TDR, I'm not sure, we need to file one form with BMC or as to how we are using that FSI or something like that. I've seen such a document.
Yeah, so every time whenever you load a TDR, for example, then you enhance your IOD, which is the basic permission. So for, if you have procured 100 square feet first, basic FSI, and then if you procure 50 square feet TDR, then again you submit a plan stating that now those 50 feet are going in the first, second floor, for example. So that would define the use that you are putting your TDR.
Yeah, so normally I think it is, we are able to establish that the later part of the TDR will get on the top of the building.
May not be exactly.
And what if the TDR is loaded at the starting of the project itself? I go and buy that TDR and load it earlier only. So then still I can identify, or I've reached the.
Without having the base, can I load something on top of
Yes,
it?
exactly. So
So
first
first you have the base, then what I can load.
So
We have the basic incentive or the TDR.
rights that I'm
Sir, but
proposing.
suppose June 2019 में जो TDR आई वो रही तो top floors में load
Construction has started in March 19. So,
Let
in.
me put this by way of example, sir.
Okay,
My initial plans was for my basement, my plinth, my parking floors, and the 20 residential floors. When I procured the last TDR, that is when I planned to put in the commercial units. Can someone not put in that way? When you're putting your building plans, I had the basic FSI, basic whatever the actual procurement, premium TDRs and all these things. My FSI was totaling 2.5. So therefore, I was constructing my basement, plinth, your parking floors, and the residential floors only. It is only when I got last TDR from the URD vendors, that is when my building plans. Now I have put in my change of building plans to put it that the commercial units will be from first to 10th floor, and thereafter I now construct my residential. So this is where the exact facts will come into play against what you have loaded, not just the top.
Yeah, against what? So your revised plan will be your mouthpiece as to which TDR is going back.
Yes.
So June 19 में जो TDR लिया वो actually में आप
Actually किसके सामने हमने उसके सामने additional क्या construction चालू किया है उस पे depend होगा.
Entire case study का crux क्या है that we have drafted this case study. Our crux was is that all these TDR, FSI, all these things is a one
Common
post, and from that you are using, or you can have it a one-to-one correlation. Yeah, of course, वही बोलता हूँ, sir, वही बोलता हूँ मैं. So I just wanted to draw the attention that you sometimes go on the basis of the IOD if you are able to establish कि ये TDR है मैंने इसके लिए load किया हुआ है. So you have to give the tax treatment accordingly.
That would be a plausible
I
argument.
think that is what the entire story is all about.
We have two online participants. One is Mr. Nilesh Javeri. Yes, Nilesh bhai, can you just unmute yourself and speak?
Hello. Hello. Am I audible? Am I audible?
Nilesh bhai, we are not able to hear you. Just a minute.
1 minute. Yeah, hello.
Hello. Am I audible? Am I audible?
Yes.
Yes, we can.
Yes. See, when you say that the date on which I procured the TDR, if before that whatever I have constructed already, then it is a very clear-cut case that that particular TDR which I bought was not utilized for the purpose for the construction which has been already done. And if that is supposed to this commercial construction, then I believe it can be argued successfully saying that it is only used for residential purpose.
We agree.
Yes.
Yeah, what we are saying is as long as we are able to prove what this is used for, we can take that argument, right?
Because date of procurement will play an important role and date of construction. Both facts are very clearly ascertainable.
Agree with you.
Yes.
Yeah, Jinesh.
So then, the view comes that whenever you are able to prove by way of documents, IOD or your building plans, one can take a view that, this can be only for the amendment that is being done in the plans at, a further stage or at a later date at a time of IOD or, taking that plan approval. One can take a relation that, this TDR is used for this purpose.
One point is that what about the common area and common all that things which are enjoyed by each and
everyone. So that is again the question, So again it goes that.
I mean, it is a better position to make it as a common also.
The staircase are not coming, lifts are not coming, generally the common area are not coming for the SSI. SSI is only for the building constructor, that is why.
Common areas do not,
Want the part of it.
Part.
They form part of the plan.
they form
Part of the plan.
Utilization of.
FSI. So one can take that view that, we can have a one-to-one allocation, but that would obviously be litigated by department and we need to have a proper documentation in place. Here, I'm just giving, what we have taken it to be a part of a common hodgepodge and how the liability would be worked out in this project. First, as we discussed, on the basic development rights, it is forward charge where landowner will have to charge tax. It will be 80% or 18% of 30 crores, 5.4 crores. And then when the project comes to an end under RCM, the second and third part of this rights are exempted. Only the last, which is being purchased from unregistered vendor, that is 10 crores, which is tax. So how do we allocate it to commercial units and residential units? I have assumed it to be a part of a common hodgepodge. So 10 crores multiplied by 25,000 square feet of total commercial construction divided by total construction of 1 lakh. So that is where 25%, that is 2.5 crore is the value of development rights attributable to commercial units. And on that 18% tax, the rate is 18%, which comes to rupees 45 lakhs. Then development rights, that 10 crores attributable to residential flats. We have an exemption that where these rights are used for sale of under construction flat, that much value of development rights TDR FSI will not be taxed, balance component will be taxed. So if we see 25,000 square feet is the unsold residential apartment, is the value of unsold residential apartment. So 10 crores.
This is 15,000. Inclusive to 50,000.
Not that.
No, 25,000.
Into play to the last bullet.
Last bullet.
Market value when you are trying to.
Yes.
The 5%.
18%.
No, first the value will be. So there are two mechanisms. So that is the second limb, 5% limb. The first is you have to ascertain the value of development rights attributable to unsold residential apartments in the project. So first mechanism is 18%.
Price, not the area.
So first is 10 crores. How much you ascertain to unsold apartments? That is 25,000 is the unsold residential apartment upon total construction of 1 lakh square feet. So again 2.5 crores value which is attributable to unsold residential apartment, and on that 18%, which is again 45 lakhs. And there is a capping given under the same notification which says that the tax payable will not exceed 5% of the value of unsold residential apartment, and value of unsold residential apartment is to be equated with the selling price prevalent at the end of the project, that is near to the completion. So 25,000 square feet is the unsold residential apartment, multiply by the selling price near to the completion, which is 15,000, and you apply 5% on that, which comes to 1.875 crores. Lower of the two is the tax payable, which in the case would come to 45 lakhs. So this is how it would work.
So I had the same answers. In short, we are saying the liability here is 90 lakhs. Don't read the one in red, which is 45. That 45 represents only on the third limb.
Lower off, yes.
So there are 3 liabilities on this slide. One is 5.4 crores, which we discussed very briefly. The landowner has to get the limit. Second, the developer has to pay on the commercial units, which is 45 lakhs. And Jinesh, just a short point here, if you read calculating notification 6, because the commercial units are being there is only a monetary consideration.
Yes.
For commercial is not at the time of completion.
Yes, agree. This would be an upfront liability.
Last again is 45. Again, the mechanism for that 45. If you see, I think other way to calculate this, which may be correct, would be you exclude the value of commercial related development rights altogether, because the formula in the notification is total rights used for residential. So in your computation, you have done 25,000 upon 1 lakh. and 10 crores.
Hmm.
Other way to do is take 7.5 crores and
25.75.
25. The answer will still remain the
Answer will
same.
remain the
But
same.
I think the language there is the total area of the residential portion.
Yes.
So mechanism may change,
Answer would remain the
remains
same.
the same.
So this is the third case study.
Yeah.
Now coming to the fourth one, transfer of leasehold land and factory building. So this is also a common case that we are facing right now with quite a few clients having industrial plots in MIDC. MIDC are granted a long-term lease of industrial plot for 99 years to Hindustan manufacturers for constructing a manufacturing unit. They have constructed that unit, they are carrying on the manufacturing activities. Now they are planning to transfer this leasehold rights along with the factory building at a common lump sum consideration of INR 50 crores. There is no bifurcation in the agreement given for value of leasehold right or value of building. The intention of the purchaser is to modernize only the machinery to a certain extent and carry on the manufacturing business as it is from the building, manufacturing unit. The supplier, the Hindustan manufacturer, has expressed the view that the recipient or the purchaser will be liable to pay GST under RCM as transfer of leasehold rights along with buildings is covered under reverse charge. The purchaser, Bharat Manufacturers, expressed the view that transaction is not exigible to GST as it involves transfer of land and building. The common consultant suggested that the seller, Hindustan Manufacturers, should charge GST and the recipient should claim ITC thereof. However, the tax manager of the purchaser is skeptical about claiming of ITC. So here, the company has approached us for the GST implications and whether the answer changes if the purchaser, the Bharat manufacturer, intends to demolish the entire building and construct a new building for the purpose of letting out. So the points for discussion would be whether this transfer of leasehold rights along with building will be liable to GST or not, whether it amounts to sale of land and building under Schedule 3, whether we can treat this to be a bundled service, sort of, what we had in the service tax regime and go by the predominant intention. Either the predominant intention can be transfer of leasehold rights or it can be transfer of building. So whether, we can go by that theory, whether we can treat it as composite or mixed supply, which we have under GST law and tax it accordingly. How do we bifurcate the lump sum consideration to the assignment of leasehold right and to the sale of building, which is a Schedule 3 item, and leasehold right is a taxable activity? Whether GST would be paid under reverse charge on. No, so I'll just put down the points and then we can start with discussion because, sir, we are running. So then, we'll start with the first question, basic question, whether this INR 50 crores.
Yes, like we have put 2 questions, right? First. So first question is what we are discussing.
Whether tax is payable on this 50 crores or not. If yes, who has to pay it?
Right.
So you are bifurcating the question. You are asking us a question whether the assignment of lease is taxable or not, right? Then the question of valuation comes.
Assignment of lease or whether you treat it as sale of building.
To be taken as assignment of lease or whether this
sale of building.
Of land or sale of land also.
Because I'm just asking you whether assignment of lease is taxable or not. That is what the first question. Then we go to the characterization, whether it is a sale of a building or sale of a leasehold land or what is that.
Yes. So any views on this, whether this assignment of leasehold right or whether it is transfer of building?
There is a 99 years lease. So I think it is as amounting to transfer of land itself.
Quasi judicial. Basically, it is a
transfer of land and existing structure building.
So it would be governed under Schedule 3, sale of land and building. The words used are sale of land. So whether you can treat this to be a sale of land.
The problem is assigner cannot sell the land because land does not belong to him.
It is leasehold.
It is a leasehold right.
It's a leasehold
Right, yes.
Assigner cannot
It also
sell.
depend on what is the unexpired period.
That is 30 years.
The unexpired period may be only 20 years.
See, even unexpired period 98 years.
Even then.
Even still,
Am I selling the land? I'm not the owner of the land. I cannot sell the land. I'm only assigning.
it is only assignment of rights.
You have the principle, no one cannot transfer
Better
What
title.
it does not.
better than one.
In fact, because there is already a manufacturing unit which is there, and this is a single thing which has been sold together. So machinery provisions are also going to be challenged, and that is where or something of that sort will definitely come into play.
Whether one can take away that this is nothing but sale of building, that the purchaser was intending only to take the building because he is not doing any major repairs or major renovations, only he is modernizing the machinery. So can we say it is only a sale of building?
Sale of building or leasehold right? Leasehold right is taxable or not? Assignment of
It
leasehold
is.
taxable. That is what the first question.
Leasehold right is-
Are
So
you
then-
agreeing that all is taxable? Correct?
Yes, yes.
Assignment of leasehold right, if we say it is not sale of land, it is taxable. So whether that is the view that everyone has,
Yes.
it is not a sale of land, not under Schedule 3.
Yes.
Yes, yes.
Yeah.
So we move
It is.
taxable. And now entire 50 crores taxable? Or we bifurcate
50 crore, Am I
consideration?
receiving from the assignment of the lease only? Or am I receiving 50 crore entirely for the building? Or am
both.
I receiving
Both.
proportionately for both? What will be the answer? Correct? Huh? Planted procedure nothing.
We, machinery che he'll modernize some, but predominantly it is for the unit that he has already set up, the building that he has already constructed.
That's a very valid point, and put that in my note, whether we can say this is a
Transfer
transfer
of
of a business or a going concern, because one of your divisions also is covered with that,
Part of a going concern.
and which is exempt from GST.
Yes.
They have not paid the business transfer agreement. That is what the.
They would be having
You need to
an
transfer all the assets plus all the liabilities, specific clauses should be there.
So here the liabilities, whether the liabilities of that unit would be taken up or not, because here it predominantly is only transfer, assignment of leasehold rights and sale of building as it is.
We are not taking the.
It is only modernizing the machinery.
Ma'am, they are not transferring the liabilities.
They are not transferring the business. We are not taking
So
the.
it's a very valid point. Assuming there's a liability one can explore, can I get out by
Saying that it is transfer of business.
So here, what should be the entire 50 crores taxable? And if yes, then whether under reverse charge or not?
Yeah, when I was student, I was being told that, once the building is constructed, the land is married to the building. So whatever you said, you are selling the building, that goes along with that. That is what, I was under having that, wrong notion or whatever notion I was having. The land always get married to the building. That was the, in India, we don't have the concept of selling the land separately and selling the building separately. I'm not the property lawyer, but that was somewhere I understood that. So can we say that when
It is a sale of building.
when full FSI is being exploited, there is no further FSI in that plot. I have exploited it maximum. So the land value is practically nil. Whatever I'm paying is for the
Building
building,
only.
and I'm retaining that building, I'm using that building. So my intention is to
Take the building.
take the building.
So
So
that-
I will say entire 50 crore rupees I'm paying for the building.
That can be one of the plausible arguments that we can have and write
There is
in.
one, but now, let me tell you that DGCI has taken the list of all these assignment transfers. And everybody is getting this particular notices.
They have taken the records from MIDC where they have issued NOC or charged, yes.
See, in strict terms, Naresh bhai, there is an element of assignment of the right.
Yeah,
Okay, forget the quantum,
yeah.
right? And if they want to put it very, very legally, if
Yeah.
there is one taxable, one not taxable for the moment, let's assume, you cannot say everything is not taxable.
Correct, absolutely. Absolutely.
And because of that element, therefore, in the interest of time, the possibility to say everything is only towards building, which is a sort of
Difficult.
movable property,
Very
that is
difficult.
a difficult proposition.
Can we say that everything towards the assignment of the lease, that is also difficult proposition, right?
That is difficult, but again, the mechanism.
No
to
mechanism.
decide what is there towards your value of land, towards the building is not prescribed here, and the consideration is also single.
So three views that come first is what Keval bhai suggested. You challenge it there is no mechanism. So how do we pay taxes? Second is what Naresh sir is saying, that we treat it as transfer of building where entire FSI. One view which can be thought of is where entire FSI is being consumed and land is being married to the building. So it is a sale of building. And the third, that everything cannot be treated as non-taxable. So
suppose if you want to be reasonable, then how will bifurcate? Suppose if we declare can we go on the basis that practically we are trying to explore this, because generally the premium is charged by the MIDC. What they do, okay, when you are transferring it, what is today's premium? And when you have bought it, at what time, that time what premium you have paid? There's a differential premium. Based on that, they are determining their assignment transfer charges. So whatever that differential is there, and this differential is there, I allocate by the, it was for the 99 years, correct?
Yeah.
Now the unexpired period is only 30 years. So can I say I work out that way? My assignment value is
this much,
only
and
this much, and balance is my building.
on a proportionate basis based on the premium
Some
being
reasonable,
charged by
some
MIDC.
logical basis.
They charge also for the premium, for the building also. They charge premium for the building as well, not only for the land.
So I am the,
This is the practical thing they do in MIDC, particularly.
yeah.
They measure the area and they charge premium on the building also, besides the land.
They are charging only because only land belongs to them, they are making only the land. Superstructure always belongs to the lazy. So they are always charging the transfer fee based on the
Value of land.
Remaining period of the lease.
I will check it up. Okay.
And under forward chapter.
So your reverse
That's the
charge,
question.
reverse charge or forward charge.
Once it is assignment, it will not fall under that reverse charge.
So that is what the reverse charge is, long-term lease of land. So this is not a lease; it is an assignment of rights. So it will not be covered under reverse charge.
And in fact, that person is not capable of giving it on lease.
He is not. Yes.
It would then have to be a sublease which may not be permitted effectively.
So this was the case study, where plausible views what we can devolve upon. So now whether the answer changes if the purchaser intends to demolish the entire manufacturing unit.
Suppose it decided to be paying the tax, whether the other party will get IC rate or not. That was the question.
So that so that
Yes,
was
first question.
Second minor, second.
so if whether the ITC can be claimed or not. If this amount is being charged, 50 crores, 18% GST, 9 crores is being charged to the purchaser, whether purchaser can claim ITC thereof, whether it will be blocked under 17(5)(d). But is it being actually used for construction? It is already been constructed.
Used for construction of a
17(5)(d) blocks credit in respect of goods or services received by a taxable person for construction of an immovable property. And construction is reconstruction, renovation, addition, alteration to the extent of capitalization to the said immovable property.
I'm not touching the building also. I'm just touching the
Machinery.
So,
input service procured by to modernize the machinery. Building में तो कुछ काम किया
So ITC available to the purchaser.
My opinion should be available. It should be department itself, it is service.
it should be available.
So that is the view that ITC should be available.
My
Any
view is
views?
that it could be subject to high amount of litigation.
Yes.
For the same reason that this is effectively used for a construction of immovable property, and where the construction includes modernization, renovation. Now, modernization, yes, we can say it has to be to the immovable property. In this case, we have in the facts that we want to modernize the machinery.
Yeah.
Now, what is that difference that we are creating in the existing machinery versus new? What is the element of so-called installation activity there? What is the foundation structure that we would need for those machines that we are installing? All of this will have to be looked into very minutely. We have been party to one of the triple ARs, which is there. I think Jinesh has put that in the case of Inox in Chennai, where this was precisely the question and the credit has denied. Facts were a little different. A unit was to be constructed there, but they have said the point here is this: at the stage when the transaction is happening, it's a merely assignment of a right. Now, one could, in a worst case scenario, if we twist this, use that space just as a parking lot. Now, in that scenario, also, will somebody say that this credit will not be available because this is, in a loose terms, immovable property? Or at that stage, I have not decided what will I do about that. Right? I may choose to decide, I am getting this, and this is a live case we have seen. I am taking this assignment. I will decide later on what I will do, then what should I do for the credit at this stage. So, Naresh, that's the thought. It will certainly be litigated. Not a easy one. Yes, we have some force to say here I am not doing anything.
There is no
Because
construction.
construction is again defined very, very widely.
And construction should be of an immovable property. It says construction of an immovable property. So here, and there is no construction which is being done by the purchaser in this case. So purchaser can take a view that I am not per se constructing anything. It is only a modernization of plant and machinery for which credit is already allowed.
No, but purchaser is only doing nothing. Why not? Seller is not doing this. Purchaser, after he gets, he is going to incur this cost for modernization.
But that would still be modernization of
I
plant
agree.
and machinery.
Immovable property is fine. The point is it's by the purchaser only.
Might be. Second part, whether the answer changes if Bharat Manufacture intends to demolish the entire manufacturing unit and construct a new building solely for the purpose of letting out. So here now he's constructing an immovable property. So ITC would be blocked under 17(5)(d) because Safari. Yes.
So now we are in the second situation. The consideration which you get is predominantly for leasehold rights.
For the leasehold rights.
Because the building you want to
Demolish.
Therefore, the consideration which is made is predominantly only for the leasehold.
But you wanted to construct the new
New building.
on that vacant land. So basically, that input services are used for construction of a new building. So it is 17(5) C and D can definitely trigger.
But that
Taxability.
major part will
Yes.
go
Now this will be the 50 crores will be,
Then he
Higher
says,
amount may be taxed.
then he says the entire 50 crore will be taxed.
it will be towards the, because he intends to buy the land.
your intention is to bring that building up.
टैक्स करो आईटीसी भी नहीं मिलेगा करेक्ट भारत people do that करके
Sir, I may be wrong, but that's a perception of the buyer that I am paying everything for the land in this example, what we are discussing. But you ought to look at this, even from the seller's perspective. Will that not be a counter argument to what you just said? We'll just take a minute on this. When I am selling both.
Land.
It's like saying I am buying a house which is with furniture.
The question is, how do you allocate? So when you allocate, one looks at when you buy
Yes.
a property.
But that allocation will be at the supplier's end, sir.
So the question is at whose end?
Purchase.
At whose end we should see this allocation? At whose end we should see the allocation from the supplier? So
Point is, what am I getting for? I'm getting it because of the land component, and therefore a greater part will have to be allocated for that. So when you buy,
Sir, you are right. You are right, but you are right from the receiver's perspective. What am I paying for?
टैक्स भर गया क्या सप्लायर को बेचने वाले को
Supplier सोचेगा, what am I selling? You may choose to scrap my machinery, doesn't matter. I am just selling you both, and I have to determine the liability.
from
So I'm just trying to give you an analogy that perceptionally, this will have to be looked at from the supplier's
buy
perspective.
agricultural land, you pay with an intention to convert it into any. You pay a price different from the price you would pay if you intended to construct. The courts have said that's a relevant factor.
Land duty also, both of them will be valued separately.
Even the agreement which is entered with the contract will be for both.
both.
Whatever you do later on, whether you
So you
demolish
get
Assignment of
right.
right.
That you want to demolish the.
that will not be entered in the contract. That this will be demolished later.
Those approvals will be taken, so if you look at the transaction holistically, you will come to.
So this we are going to share various rulings
So we
on this issue about credit eligibility, etc. is already part of the presentation.
This PPT will be shared with the
Yes,
members.
it will be shared.
Because it will be shared.
Yeah, I've already sent it to chamber.
Okay.
Yeah, okay.
Now, here the next case study is construction of affordable low-cost houses for municipal corporation. This is one of the recent schemes which is going on. The builder, he is owning a land, and BMC has come with a scheme for PAP units.
Jinesh, एक मिनट, we have question number 5, question number 6.
See, yeah.
टाइम आपका ओवर हो गया है, तो 5 और 6 को दिनेश और अपने हर्ष भाई को टाइम देते हैं.
हाँ,
One sided this thing is okay.
yeah.
Maybe 10 to 12 minutes max, we'll finish both.
15 minutes.
Yes.
No discussion on that. Correct? Only
They'll express their views and
Yeah.
conclude it.
There are more questions than views.
Yeah.
So here the company has undertaken project for PAP units, project affected persons who are actually affected by this land acquisition or by new infra projects and all of those. They'll be handing over 500 units to BMC. The size of each unit is 27.88 square meters, that is roughly 300 square feet. BMC will compensate by way of issuing commercial credit note. So basically in this project, per house, up to 39 lakhs of credit note can be issued by BMC. So here the worth comes around to 195 crores and it will be released in tranches. First is on acceptance of LOI 10%, completion of plinth balance 50%, and handover and completion of PAP units balance 40%. Company has an option to either offset the amount of credit notes towards the future premium payable in any of the projects, or they can sell it in an open market and the value will depend upon the prevalent market conditions. The second mode of compensation.
If you are constructing the property and you are handing over to the BMC, then they don't have the money right now. What they do, they issue the credit note. Last part में जो है वो credit note आप खुद भी use कर सकते हैं. आप क्या? Again,
So-
अभी मैं जब भी आपको बेचने का होगा सर्टिफिकेट, आपको BMC से 100 रुपया मिलता है प्रीमियम. You will give me 90 only, na sir.
You will not pay 100. So I don't know how much amount I'll realize it from that certificate. Second is the land TDR and the construction TDR. So land TDR is basically towards the land that is the builder is parting away, and construction TDR is towards the construction cost that he is incurring. Again, he can load it in any of his project, or he can transfer it to a third party, and realizable value will depend upon the market conditions. Now they are confused as to what is the implication, whether any GST liability triggers on PAP units which are handed over to BMC. So this is supply definition includes barter. Here you are providing construction services on your own land to BMC, and in turn you are getting some consideration. This is a supply which is liable to GST.
It's a supply.
How should one determine the value of
Yeah.
How should one determine the value of units handed over to BMC? 15.1 says price actually paid or payable. Here we have the price. Price can be termed, like for credit note, we know what is the value, but we don't know what is the value of land TDR, construction TDR. So 15.1 will not apply. We'll have to go to the valuation rules. First is the open market value. So whether do we have any open market value of the PAP units which are to be handed over to BMC? It would seem a bit difficult because here the entire project you are required to hand it over to the BMC. You are not selling it in an open market. So it may be difficult to ascertain the open market value. However, one can take a view that what will be the open market value for BMC if they are purchasing this entire unit on as is where is basis from a third party or from a market. Any amount that they may be paying, say 45 lakhs, 50 lakhs, 60 lakhs, whether that can be treated as the value, open market value.
Slightly difficult on these.
Difficult.
Market value is difficult.
Second is the monetary value of a non-monetary consideration under Rule 27B. So non-monetary consideration, I have value of credit note, say 195 crores, but I don't have value of TDR or construction TDR. It will depend on whatever rate I'm fetching in the open market at a future date. So again, trying to value this on that basis would be a bit difficult. There are markets of TDR, where you can sell this TDR, but obviously the rate would depend on negotiation. You don't have a benchmark price for this. So
So just to add, 27B says you take the monetary value at the time of supply, and for this TDR, we don't know at the time of supply what is the value, and therefore it may be difficult for this. Also, for the commercial credit notes, we know what is the quantum that we are getting.
Yes.
So one part of the consideration we can go on 27B, but for the other we cannot.
then after that, we have value of like, kind and quality. Again, in this project, you don't have like, kind and quality. Entire units are being handed over to BMC. So this is also difficult. And last goes to rule 30 and 31. 30 says cost of construction plus 10%, and 31 is reasonable means. So cost of construction can be ascertained from this. What is the cost of construction or cost of provision of service? Provision of services. So provision of services would also include the land value. So if land has been procured at certain value, that also might be have to be added to this value. And on that, you load 10% and then you charge 1% or 5%, whatever the value would be coming. Or by reasonable means, whether we can adopt a ready-reckoner value, the ready-reckoner value of a constructed house would be available. So whether we can adopt that also would be a question.
So 2-3 options that emerge. One is you take the value of the commercial credit note that is already available, and whether you then try to find some mechanism of finding the value of the TDRs. For example, is reckoner value said to be a reasonable mean, and you add that to the value, because
But reckoner value of land, because for TDR you will not be having a reckoner value.
the difficulty here is for part of my consideration I have mechanisms to decide the value, but for part I don't. Therefore, for my service is ultimately one. What is the basis I go for? So as long as my thought is till the time I have not arrived at my final consideration, I have to keep going down in that order to decide what will be my value.
And if we go that deep down, then what is the rate? Again, you know, whether it goes below 45 lakhs to say it is an affordable residential apartment. But definition of affordable residential apartment says gross amount charged. Gross amount charged should be below 45 lakhs. So whether any amount is being charged or not to BMC, whether we can say that this is the amount charged, and whether we avail benefit of 1% or we go to 5% straight away.
So I don't think we should worry about gross amount charge because it's not charged. We have to look at what we are getting from the BMC. We know the number of units that have been constructed.
Divided by the total
Divide that
consideration
by the
value.
total consideration, and you will get the value that is exceeding 45 and 5%.
So
or else not.
What happens if, you know, this TDR and construction TDR is loaded in my project? I don't get the value of TDR, you know. So at what point in time should I say what is the value of my consideration? TDR, if I'm selling in open market, at a later date I'll be able to ascertain the value of TDR. But if it is being loaded in another project, what will be that value?
Again, on the valuation part, vis-a-vis the rate. We'll have to agree that valuation may, for example, I take the commercial credit notes plus I take the regular value of the TDR. For the moment. We'll have to crystallize the value. The rate
at
is
some point in time.
The rate is going to be consequential.
And again, if we go for rate 1% and 5%, the rate notification reads construction of apartments by a promoter in a project. Promoter is defined under RERA, project is defined under RERA. This project might not be registered under RERA. So maybe one advice would be you register under RERA. But, you know, again, a way out would be the definition only refers to the definition clause of RERA. So say promoter as defined under clause 2. Clause 2 of RERA is the definition section. If you satisfy that definition, registration is only consequential. If you don't register, even if one can take a view that GST only refers to the definition clause and not to the registration provisions. So once you satisfy those definitions, you can still be a promoter, you can still be a project, and you can opt for 1% or 5%. At what rate should subcontractors charge to company? So obviously here, you know, if we are not able to determine whether it is below 45 lakhs or above 45 lakhs, what should be the rate? There is one entry 3 subclause 5 subclause DA which says low cost houses in an affordable housing project given infrastructure status, right? There's a notification by Department of Economic Affairs, and in that affordable housing project is defined where 50% of the FSI is used for houses below 60 square meters. So here in this, all the houses are below 60 square meter. My entire FSI is used for this. This is an affordable housing project as per that notification of Department of Economic Affairs, and I can charge at 12%. The subcontractors can take a position that they can charge GST at 12%.
So the key point is even if the value is higher than 45 lakhs, there is still an entry which is available under the law. So you are looking only at the size criteria. As long as that is more than 50%, you still have this option. And we should look at the broader possibility of using this rationale that we are speaking, because this applies to various, very many developments.
Quite a few projects. Whether further sale of commercial credit notes and or TDR is exigible to GST. So first, commercial credit notes, there is some value which is underlined that, say 195 crores. If I give this credit note to the MCGM or the BMC, they have to offset it against the future premium that I have to pay of 195 crores. So there is some amount which is due from BMC. Can we treat it as an actionable claim, that this is nothing but transfer of an actionable claim, even though I'm transferring at 150, 160 crores, but there is some underlying right where the purchaser can go to a BMC and claim that amount. Actionable claim says claim to a debt. So this is a debt which is due from BMC. Amount is already due. Amount is certain. So one can take a view that this is nothing but sale of an actionable claim, and hence it is excluded from Schedule 3 and not liable to GST. And second is TDR. If you are selling it to a promoter, it is covered under reverse charge. And if you are selling it to a trader, then it will be liable under forward charge.
Same views. It will be difficult to say commercial credit note is a transaction in money. So that view is going to be difficult to adopt. We can even refer to this being a slightly akin to a duty credit script, not from an exemption perspective, but trying to giving it a color of an actionable claim. So that famous Sunrise Lottery case has specific 2-3 lines around duty credit script saying these are actionable claims that can be included.
So that can be an additional argument.
That is, if at all relevant, only from the perspective of the rights that you got from them, the TDR. We are looking at the
Further
construction
sale.
service. Okay, you are right. So the question to that is that the rights that you got from the BMC, do you need to pay tax on that under reverse charge as a promoter? There we will use 243W to say no, we will not have to pay because of 243. But right now we are on
Further sale.
Construction, what all I need to do, and when I'm selling it further.
So these were the views in brief. And
3 minutes max.
And last one is the case study of SRA, where a company is owning a land and there have been an encroachment. And for another project, land belongs to state government or the SRA. On that, they have been awarded an LOI for construction. They have to construct residential tenements as well as commercial tenements. And they are entitled to receive development rights, TDR FSI, which can be loaded in this project in the saleable component, or it can be traded in the market. It seeks an overall advice on taxability of SRA projects undertaken on public land as well as private land. So first, going on the public land, typically the land belongs to the state government or the SRA authority. It does not belong to the builder. Builder is providing services to SRA. SRA is the recipient of service because they are liable to pay the consideration. They are liable to pay TDR, FSI, or they are liable to release all those certificates in favor of builder. Slum dwellers are only a beneficiary to these services. This is a works contract service which a builder is providing to the SRA in respect of the rehab tenements. And on that, the tax rate, again, we can take a view, it will be a 12% and not 18%. 12% because this is an affordable housing project where all the units are below 60 square meters. Again, it has been given an infrastructure status because in that notification, there is no requirement of registering a project as an affordable housing project. There are no conditions for approval as affordable housing projects. So one can take benefit of that entry and state that, whatever service are provided to SRA is a works contract services and liable to GST at 12%. At what time when the tax would be payable? When the TDR has been consumed inside you, that is in the sale building, you just apply to SRA that, I've constructed these many floors of SRA. So you give me CC for constructing, say, 2 floors, 4 floors of the sale building. So whether on that date of CC, you can say that, this is the point in time when I've provided certain services to SRA, or your right accrues brick by brick that, when you put 2 bricks here in the rehab building, you get a right to put one brick in the sale building. So a rational view that everyone has taken is that the rights accrue brick by brick every month, and the value of this services, what should be the value of these services? Again, whether open market value, there is no market value of works contract services. Second is monetary value of non-monetary consideration. We'll be receiving TDR, FSI for construction in sale building, or which we can sell in open market value, in the open market. So again, we don't have a value at the time of providing services to SRA. So that also will not apply. Value of like kind and quality, that also becomes difficult because there is no like kind and quality. The residuary clause goes to cost of provision of services plus 10%. So one rational view that everyone is taking is that month on month basis, you ascertain what is your cost of provision of services, you add 10% to that and pay 12% tax and claim corresponding input tax credit, because this is a works contract services liable to GST and you claim credit on that.
Just one small fundamental point, whether it's a works contract service only, or I'm just throwing another idea, it's a construction service where consideration is in the form of development rights, and therefore, whether the entire structure changes to say you will still providing a construction service, consideration in the form of development rights, and therefore all of your entries from 3IA, IBIC, all of that get into the.
So it is not a works contract, it is construction.
Yes, where
Because
consideration is in the form of development rights.
Here, the works contractor is taking the obligation of clearing the slums, approvals and everything. So whether it is something much more than a works contract service.
That's right. And if that happens, then a lot of things will change. Your rate will change, your time of supply again could
Everything.
ITC credit will change. You could shift it at the time of receipt of OC or whatever.
So that would be a department that you are providing construction service.
And we got to keep in mind that that's a fair view, fair possibility, because nowhere construction service says that you have to be the owner of the land to be providing construction service.
In that case, we are taking that position. Then in that case, we are exposing ourselves to the value of the flat. In that case,
Yes.
we are exposing ourselves.
Rate, value, time of supply, everything.
Rate also will be 1.5% or 7.5. There will be no deduction for transfer of land. So that can also be, the rate can also increase.
That is also an alternative view that we need to focus and maybe rule it out.
Yes. And if it is on a private land, the first one was public land, private land. So whether one can take over that this is a construction services where value of land is being transferred to the SRA. I am selling my land, though it may be at the first stage or it may be at the end, but I am transferring my land to the SRA or to the slum dwellers, and I am providing construction services thereon. So whether we can explore possibility of 1% or 5%, but again a value would be a challenge. How do you determine the value? Whether you again go by the Regner value, which can be treated as the base, that this much is the value of units.
Safer would be that, as per me, you go by the sort of market value, because now that has become the norm, especially after that explanation 2A.
Yes, to avoid litigation, you go by that. So I think
any other valuation is surely likely to be challenged.
These were the more or less views on SRA, and we conclude with this.